Good evening. Welcome you all, our students, our alumni, members of the university community, guests, and speakers. My name is Nasser Spear. I'm Deputy Dean of Melbourne Business School. Firstly, I would like to acknowledge the traditional owners of the land in which this event is taking place, the land of Wurundjeri people, and pay my respect to their elders and families. I'm pleased that so many of you have joined us throughout this week focusing on China. The dynamic events and workshop we have delivered this week have focused on topics such as Australia-China business relation, living and working in China, as well as some of the career opportunities and career pathway for our students and our alumni. Tonight, Jill Lai, Associate Professor of Marketing in the Faculty of Business Economics, will chair a panel of industry leaders drawn from KPMG, ShineWing, and China CITIC Bank. I'm sure that you will enjoy hearing their experience and gain insight into regulation, policies, and markets. Jill, I now hand it over to you to lead the proceeding. Thank you.
Thank you, Nasser, for the introduction. Indeed, the topic today is of great interest to both Australian and Chinese business communities. The Australian economy had a significant outperformance in the first quarter of 2006. And a significant contributor to that growth is the substantial boost in exports to China. And in addition, Australia has significantly increased its outward investment to major Asian economies, including China. Meanwhile, the Chinese government has also introduced a number of policies in the recent years to encourage its domestic firms to invest overseas. And a large proportion of that investment was made in Australia. So given the mutual benefit of collaborations between the two economies, both Australia and China embraced this partnership with each other. And this partnership is also a critical factor for the regional prosperity and stability. As we also can see that this Australia and the China partnership has become increasingly important, as now China is Australia's largest trading partner, and Australia is the main source of resources for China. However, there are also many challenges to further maintain and further strengthen this partnership because of many differences between the two countries in political systems, histories, and strategic interests. So today, we've had the honor and pleasure to have invited the three industry experts to share their views on the many issues we want to discuss today, particularly in the business synergies, opportunities, and the challenges in the Australia and the China business relations. So I wanted to first briefly introduce our panel to the audience. Then I'll give each panel member a few minutes to introduce themselves and their experiences in their respective industries. So today, we've had the pleasure to invite the panel members, Mr. Matthew Schofield, partner of ShineWing Australia, and Mr. Peter Liddell, partner of KPMG, and Mr. Jing Wang, the representative of the CITIC Bank, Sydney office. CITIC Bank is China International Trust and Investment Corporation Bank. So, if Matt, you wanted to start with a bit of brief introduction?
Yeah, sure. Thanks, Jill. Firstly, just like Matt Schofield, just like to thank the university for the opportunity to participate in tonight's event. I sort of wear two hats here tonight. I'm on the Alumni Council for the Faculty of Business and Economics here at the university, but I also work daily in the China market. I'm currently an audit and assurance partner at ShineWing Australia. ShineWing started out in the 80s as CITIC accountants, so Jing and I sort of come from brother and sister companies. And over the years, ShineWing, which started as CITIC accountants, became Xingyong Zhonghe in China, and then became ShineWing in the Western world. We set up here in Australia in 2008. I joined in 2009 as an audit partner off the back of some large Chinese investments here into Australia. So I'll be able to share some of those experiences with you tonight. But basically, I just look after Chinese inbound investments and where possible, help Australian companies go back into China. But I spent a long time playing cricket here at this university, used to frequent this theatre back over the other side, and was previously the director of cricket here, so always love coming back here, and thanks again for the opportunity to be here tonight. So.
Thank you, Matt, and welcome. Peter?
Thank you very much, and again, my pleasure to be here and have the opportunity to speak with you all this evening. So Peter Liddell, KPMG consulting partner. I've actually got a couple of hats here at KPMG Australia. Firstly, I look after the entire management consulting team in Melbourne, which is just over, these days, just over 600. Surprising that when I returned back to Australia in July 2015, it was just over 400. So we've actually grown by well over 200 bodies in the past 12 years, and managing that team and all the challenges that go with such a large team and new additions is part of what I do. I also have a regional role. I look after our strategy and operations consulting practice across Asia Pacific, which effectively, again, we support our local Australian clients as they look to do business within Asia, and particularly China, but also for our multinational clients that are moving into region and into Australia. I was very fortunate back in July 2012 to have the opportunity to be transferred to our China firm, and was based in Shanghai for 3 years. Took my family across, where I was responsible for working with our multinational clients, predominantly out of North America, Europe, but some Australian companies, and helping them with their China market entry strategy. And for a number of them that were already there, helping them to expand their operations and really seize those growth opportunities, but to navigate a lot of the challenges and risks that are presented when you enter these types of markets. So now back in Australia, helping our Australian colleagues to understand some of those challenges, but also make the most of those opportunities that are presented.
Thank you, Peter. Welcome. Yes. Wang?
Hello, this is Zheng Wang, and actually I graduated from Melbourne University in 2008, and after that I returned to China, joined the China CITIC Bank in 2009. Before joining senior representative office, I took many roles with the bank. Previously, I was a relationship manager in corporate banking, responsible for looking after the bank's business with multinational companies. And later, I was regional manager in the head office corporate banking department, supervising the bank's relationship with strategic clients, corporate clients in the South China. For many people, I think maybe you are not really familiar with China CITIC Bank, especially for local Australians. So I may take some time to just introduce my bank. So China CITIC Bank, established almost 30 years ago, is a banking arm of CITIC Group. CITIC stands for China International Trust and Investment Corporation, which is one of China's largest financial conglomerates. For the size of the bank, now we are seventh largest lender in China. And we reached 1.1 trillion Australian dollars for the total assets. So compared with the big four Australian banks, we are larger than any of them. And globally, in the newest 2016, the top 1,000 World Bank ranking by the British magazine, the Bankers magazine, we rank 30th in terms of Tier 1 capital, and 76th in terms of total assets. So it's generally speaking, it's a very large corporation, a very large bank. And previously, our business operation mainly focusing in domestic market in China. We have a fully owned subsidiary in Hong Kong. It's China CITIC Bank International, which has more than 40 branches in Singapore, United States, and also in Hong Kong. And as part of the bank's international expansion strategy, We established the London rep office in 2015, and recently we established the Sydney rep office. That's the reason we are here.
Thank you, Jing.
Thank you very much.
Thank you, Jing. Welcome. And thank you again for making the time to be here with us tonight. So in the next 45 minutes also, we'll first discuss a number of issues on the topics of synergies, opportunities, and the challenges for business operating across Australia and the China business landscape. And then we'll open the floor for questions from the audience after the topics discussed. The first topic that we wanted to discuss with the panel is about the current status of business investment between Australia and China. Some statistics have shown that Australia has dramatically increased its outward investment to major Asian economies, including China. And the Chinese investment in Australia has also been dramatically increased in the last few years. So we wanted to know a little bit, the current status of this kind of investment. I'll maybe start with Jing this time. So can you maybe give us some rough ideas about the areas of Chinese investment in Australia and the rough size of each sector? Yeah.
Thank you. Actually, we have seen in recent years, China has maintained a very large investment into Australian market. So particularly last year in 2015, the Chinese direct investment in Australia reached more than 15 billion Australian dollars, which is more than almost a 60% increase year by year. So if according to the data from this research conducted by KPMG and the University of Sydney, the Chinese investment mainly focused on real estate last year, which accounts about 45% of the total investment, followed by 20% in renewable energy and 17% in healthcare. Surprisingly, for the mining sector, the Chinese investment only accounts for the 9%. I think this actually represents the Australian economy's transition from mining sector to non-resources sectors, particularly service sector. And also this, of course, is also driven by the change in domestic demands in China.
Thank you for the information. So Peter, can we ask the same question? So what about the Australian investment in China? So the sectors and the rough size in each sector.
Yeah, sure, John. Happy to answer that. And Jing, thanks for referring to a KPMG study. Nothing like a bit of publicity. It's interesting because while it's very well captured and in fine detail on the inbound, the outbound is actually a lot more challenging to ascertain exactly where it's spent. But there are some good research by the Australian government that highlights that. And again, you did mention referring to our growing exports, which I think are now exceeding 120 billion into China. But in addition, in 2015, Australia invested just over 70 billion for the first time direct investments into businesses in China, which actually has taken it up to 5th on the overall table. And you only have got to go back 3 to 4 years ago. We weren't even in the top 20. So to support your hypothesis, Jill, that Australia is definitely growing its outbound investment into Asia, and certainly China is absolutely correct. And this is where it starts to get tricky in terms of the accuracy of exactly where it's spent. The research that I had from a number of my colleagues who are still in China, and also from a couple of different sources, tends to suggest that the majority of that investment, so somewhere between 70 to 80%, is ultimately across 3 major industry sectors. So mining, manufacturing still gets a lot of investment from Australia, but definitely a lot of growth in finance and insurance. So the Australian financial services industry is really starting to pick up its investment into the region. And then the rest of it is quite scattered, but probably the 2 notable areas of investment or sectors of investment is retail. We're starting to see Australian retail invest, but also the education sector that's starting to come through as well.
Thank you, Peter. So Matt, given your experience and your background in investing in both countries, from both countries, can you maybe comment on the investment from both countries, if there is anything that we should be knowing?
Yeah, sure. Thanks, Jill. Yeah, well, mine sort of, I suppose, a bit of storytelling might sort of help. Might help elaborate on this, but got 3 clients that have invested well over $1 billion in the Australian energy and mining sector, and they will continue to invest in that sector. A mutual client of ours, Peter and mine, our firms, is building a $400 million lithium concentrate processing plant in Perth, as announced this week. So they will continue to invest here. That's a very hot sector. The coal sector, they'll continue to invest in. All of the major players are here and they have to restructure their investments in that sector, so that will continue to happen. Similarly with iron ore, they're also now investing in the renewable energy space. So one of our clients, SPIC, or State Power Investment Corporation, paid over $3 billion for Pacific Hydro in the last 12 months. We also worked on a $300 million wind farm acquisition for the same group. So renewables is a very hot space. They said they'd invest in that every month if they could, but there just isn't enough facilities to invest in. That includes solar as well. But that's sort of at the big end. We've also had groups acquire publishing houses. We've had groups acquire education consultancy groups. So they're also getting into that sort of granular services sector and just snapping up businesses there as well. So the investment is, it's very broad. It's wide ranging. And that doesn't, there's agriculture, we work on those sort of every second day as well. So they're hitting all sectors. We recently had 2 groups from the same province come out, and they were interested in acquiring Australian businesses who manufacture sort of industrial and commercial shelving. So again, it's all about gearing up for, property, construction, vertical integration, that type of thing. So it's very varied, and that doesn't include, the hotel sector. They've bought up half of the Whitsunday Islands, so it's quite dramatic. And going back the other way, it's, as Peter said, it's all about education, aged care, health assistance, they're calling it. So all of the vocational institutions are heading into China. All of the universities have set up there. You've even got Haileybury College, Caulfield Grammar. So it's quite granular and it's significant. So.
Thank you, Matt, for sharing that information. It's actually very encouraging to know that this relationship between Australia and China has been really, really strong, has been probably stronger in the last few years. Despite the progress made in strengthening this partnership or business relationship between China and Australia, I'm sure there are also many, many challenges and over risks that the companies have faced during the process of establishing their presence in China or Australia. So our next topics will be about the challenges and risks that the companies have faced and how they should be dealing with such risks or challenges. I guess this challenge or risk could include, but not limited to, things such as local business competition, laws, regulations, policies, and infrastructure conditions. So maybe I'll start with Matt this time. So can you maybe share some insights into these kind of challenges or risks in general, and some general guidelines or advice on how companies should deal with such challenges or risks? I guess it's quite a big question. Yeah.
Yeah, again, a big question for a big topic. So the obvious one is, get advice around FIRB up front. Too much of what you're reading in the paper is just driven by bad advice, where they've decided to consider the big issue at the last minute and they've incurred significant costs around advisors' fees and etc. And then got to the end and found out that they can't even complete the investment. So that's sort of trying to even get into the market. Those that have got into the market have, again, with FIRB issues, some have been forced to do an IPO within 3 years of acquiring an Australian business, which is, obviously, as we'd all know, is completely uncommercial. You can't just be forced to do an IPO. So that's another challenge they've faced. They were both FIRB issues. Around competition and market, again, it's sort of industry specific. So Chinese coming into Australia are very good at mining. They know how to mine. Geology is sort of a universal sort of topic or subject matter. But when it comes to, say, investing in farms, the challenges are significant because farmers in Australia tend to know every square or every blade of grass on their property. They know when it rains throughout the year. They know a whole lot of things that are very specific to their land and their region. And so where the Chinese have been very good in mining and coming out here and having their sort of young bilingual people collaborate and integrate into that sector, the agri sector is a bit more challenging because trying to find bilingual sort of collaborators who can come out here and do the on-the-ground sort of market penetration and market analysis is challenging. So that's sort of, things that we're seeing. Going back the other way, we sort of, without wanting, there's a lot of successful stories around Australian companies going into China. So that's sort of one category, those who have got good advice, picked the right market, done their market analysis and got their structure right. We then have the groups who don't get the structure right, but do good market analysis and pick the right sector, and they're the ones who make all the money but then can't get it back out of China. So we've had quite a few of those, and then the sort of third category is those who just see the pot of gold, rush in, no market analysis, get caught up with all the intermediaries and the middlemen, think they're getting in with government connections and all this type of thing, and it goes pear-shaped. So, yeah, but I'll leave it at that.
Yeah, thank you, Matt. So Peter, talking about some specific cases. So if you think about some Australian firms now investing in China, so what are some specific challenges Australian firms have experienced? Do you have some specific case studies that you can share with us?
Yeah, sure. I'll need to be careful because some of them are a bit confidential. And,
Sure.
Look, definitely. Right up front, you touched on a couple of one, and let me do a couple of the topics, because there are a lot of issues when you need to navigate when we are entering China. And Matthew, pointed out very clearly that those that rush in are the ones that really struggle and get caught up because of regulatory or market issues, a whole range of factors that get them in trouble, both financially but also legally as well, through the different regulations that they break, not unknowingly. But if I take the first one, competition. Competition in that market unrivals anything I've seen in any other market. Even in my industry, I'd never met 80% of the competitors in that market that I faced over there. They're just not here in Australia, and that goes for many different industry sectors that make their way into that market. Those that tend to succeed and have a lot of success are the ones that actually really think about not just the segment that they're going to, or they've done their market analysis, but very much around the product that they're taking into that market and how it's tailored exactly for the many different markets within China. One of the biggest mistakes that many Australian companies make is that they see China as one market, and it's many, many different markets with many, many different consumers and tastes and behaviours. And even the businesses that operate in there and buy consumable business products have very different preferences as you move across province into city into region. So one of the biggest lessons from a couple of my clients was to really do the research, even around packaging. The way we package and sell goods and distribute goods in Australia is very, very different to the way that the Chinese customer wants to consume those products in that particular market. It's no surprise that some of the most successful multinationals, unfortunately not Australia, but Procter & Gamble, Unilever, have big innovation hubs in China to understand what the Chinese consumer want, and then they change the tastes and flavours of their shampoos, their consumer products, all the things they sell into China to align. What I found the most interesting was that Starbucks, who obviously well known for tea and coffee, are absolutely accelerating and killing the market in cakes and pastries. Yet a well-known French brand who came in was turned around in 18 months and made huge losses. Why? Because the French came in with the French products and that's what they sold. Starbucks did their research and started changing their tastes and the way that the food looked to what the Chinese wanted. So green tea flavours, I'm telling half the audience here who probably know exactly what they want, red bean, all the different flavours and tastes that they're looking for into their products, and that's why they've gone through the roof. So really understanding what your consumer wants gives you that competitive advantage in such an intensely competitive market. The other thing that you highlighted also is the regulatory, and I'll put regulatory reform and tax in that market is changing quite significantly. My estimate from working with some of the big global multinationals and Australian companies was that if you didn't respond in the right manner and take advantage of what's going on and changing, it could cost you somewhere between 0 to 30% in the price differential of your product, both from missing the tax opportunities, but also from over-complying or not responding correctly to the right regulatory changes as they happen. I mean, the biggest one for me was in December 2012, when the VAT was adjusted on all transport and logistics moving through China. It allowed you to save 6% immediately just by filling out a different form and handing it to your 3PL. 98% of the multinationals and Australians that I dealt with weren't aware of it and therefore were paying that 6% above the odds. That's just, 6% additional to the cost of your goods distributed can be the difference between obviously a massive amount of margin that you lose, but also a competitive advantage or a loss thereof. So, the two biggest challenges that I saw, and as I said, there are many, was being able to respond to that intense competition, but also navigating consistently the regulatory and tax changes. And my Australian clients that did it really well, to Matthew's point, took the advice. They had some in-house advisors, but they constantly refreshed with those of us in the market who do the research all the time and look for the changes and made those, gave that feedback.
Thank you, Peter, for sharing these insights. Now, Jane, and the question will also be quite specific. So for Citibank to establish its presence in Australia, so what have been the challenges you have been experiencing in Australian markets? Yeah.
Okay. Because at the moment we are owning a representative office in Australia, so by the regulatory requirements in Australia, we are not actually allowed to involve any business operations in Australian market. So for us, the main challenge is really because we really want to speed up the process of receiving the approval from the regulators. So we can achieve the fully operational status as soon as possible. Mm-hmm. But from the regulators' point of view, they actually want us to come here and to learn from the market, to understand the Australian market conditions, take some time, not in a rush, and to really have a clear analysis of our risk policies. And then they will provide you the approvals. Mm-hmm. So this is actually a little bit, it will take some time. Mm-hmm. From our understanding, this could take as long as from 2 years or even more. Mm-hmm. Some of the quickest one we have seen actually took 2 years, but some other banks, foreign banks, even took like as long as 4 years. Mm. So this is a main challenge for us. But for some other Chinese banks, they already established their operations in Australia. That's a different story. From my point of view, I think they are facing two kinds of challenges. First, they face the challenge of competing with the local Australian banks. It actually, I'm quite surprised. Australian banking sector is really dominated by big four Australian banks. By the total in terms of total asset and profit, actually, the aggregated total assets of those Australian and also the profits of those big four Australian banks account for more than 80% of the market share, and also total assets in Australian banking industry. We also have a big four Chinese banks, like in China, but it's still quite different. And so they are kind of too big to compete for Chinese banks operating in Australia. So instead of thinking a competition, we should actually think about how to cooperate with them, mm-hmm. to take some business opportunities from them. Like, for example, I've been talking with representatives from different Australian banks, each of the big four banks, and they are very happy to cooperate with us in some risk sharing, especially project finance, syndication in those areas. So this is one side of the challenge. There's another challenge I would think is for the Chinese banks. They also compete with each other in this market, and especially for us entering this Australian market, APRA, that is a regulator to approve our branch application. I think they would think we already have 5-6 Chinese banks operating in this market. How are you going to gain the market share and have your own customers? Because if you list all the customers of those Chinese banks, actually most of the banks, most of the customers shared by those Chinese banks. It's not a surprise. So I would think actually for each of the Chinese bank, they have their own competitive advantage. For example, Bank of China is specialized in foreign exchange business. And Agricultural Bank of China, they are They are very good in agriculture business, agribusiness. And the Bank of China Construction Bank, they are very good in infrastructure and construction. So we need to use our strengths and to focus on the niche market to compete. That's my point of view.
Thank you, Jing. Thank you for sharing your insights into the challenges and advice on how companies might handle or deal with such challenges. But as Jing just said, actually, it's quite interesting. Some of the challenges could be turned into opportunities as well. And so for the next topic, I want to focus on one of the particular challenges that is present in both Australia and China. In particular, China is now currently in the process of reforming its economy to a more consumption-based economy. And Australia is also shifting to a more human capital-based economy. So both economies are experiencing this transformation. So these transformations in both countries could provide new opportunities to companies from both countries. And this also means that companies that have missed the China's or Australia's last growth phase could probably benefit from the next boom. So I will maybe start with Jing this time. So given the transformation of Australian economy, what are the potential areas that the CITIC Bank would consider providing services? Or also if we talk about other Chinese banks, what are the potential areas they should tap into in order to have this synergy with the transformed Australian economy?
Personally, I think for China CITIC Bank, as an example, and also I have talked with other Chinese peers, our Chinese peers in this market. Actually, we have a very broad industry coverage, so it actually covers most industries in Australia, especially those industries that attract Chinese investment. For example, mining, mining of course, and energy, and agriculture, healthcare. So it's actually, we are also, following this economy transition from mining to border industries, especially the services industries and also some finance industry as well. And for China CITIC Bank, we have our target customers. Generally, we think we have 4 groups of customers we are very interested in. The first group of customers, they are actually subsidiaries of CITIC Group operating in Australian market. So before we came to Australia, our parent company, that is CITIC Group, they already have a very long history of operating in Australia. For example, CITIC Mining International, CITIC Resources, CITIC Heavy Industries, they have been operating in Australian market for a very long time. A second group of customers, we think like we could have, because we already, before we came to this market, we already have our customers based in China, headquarters and head office based in China, but they have their Australian operations through branches and subsidiaries. So we actually, this is also part of the reason we come to Australia, is to follow those customers. And the third target customer group, we think we want to cooperate with Australian local companies, especially those companies involved in China-Australia trade and investment relations. And the fourth group, we think we want to cooperate with financial institutions in Australia, Australian banks, foreign banks, including Chinese banks, Australian operations through branch and subsidiaries.
Thank you, Jing. So Peter, if you were to recommend some new areas that Australian firms can invest in China, given Chinese economy transformation, what are the new areas do you think that Australian firms could tap into? The new opportunities, so to speak.
There's a few, and if my esteemed colleague here could happen to lend me $1 billion, I would love to go into China and aggressively invest into a couple of key areas. Firstly, aged care and healthcare, and I'll explain a little bit why. Secondly, I would definitely be looking at specialised logistics services, particularly around cold chain reverse logistics. And the third area for me that I'd love to get into would be around bringing ag tech innovation into China. The reason for those is that if you look at aged care facilities and healthcare in China, it's really at the cusp. It's a start of a very immature industry that's got decades and decades of growth in it. There are many property developers and multi-billionaires looking to build big healthcare and aged care facility parks. So I'd love to be in now, because now's the time to ride that investment and that growth, as I said, but in an industry that will see significant growth for decades, not just 5 years or 10 years. From a logistics perspective, look, I could tell you from all the clients that I work with in China, the biggest challenge was the lack of logistics infrastructure and capability was well under the requirements that the market demanded. So it's the only market I ever saw where demand exceeded supply, somewhere around a factor of 1.25 to 1.4 was my best guess. And when you get into specialised services like cold chain, dangerous goods handling, reverse logistics, then those odds just extrapolate quite significantly. So getting into that market with those sorts of capability, there are huge opportunities. And then of course, bringing agricultural technology, innovation that's focused very much around increasing yields, but doing it in a manner that helps to eliminate a lot of the pollution. It's not contributing to air or water or other sorts of pollution. Is an area that a lot of emerging economies, but especially China and the developing markets need, because we all know that by 2030 the world's going to struggle to feed itself. That market will have a lot of challenges. So if we can help them to grow and increase their yields, there's a big market there for that sort of innovation. The fourth area that I wouldn't personally get into, but of course, is mining services. Is a huge growth sector for me because, again, just the growth of mining in general, as Matt pointed out earlier. So they'd be the four key areas that I think have got significant growth potential for quite some time.
Thank you, Peter. So Matt, both Peter and Zheng have recommended some new areas for Australian firms or Chinese firms to tap into. But we all know that for a company to enter a new market, a critical factor is to align its product or service value proposition with the specific requirements of the local customers or local consumers. And Peter also mentioned before that in the Chinese market, consumers' requirements or demands are so diverse and sometimes so high you can't possibly meet those demands or requirements. So do you have some general guidance or recommendations on how Australian firms can possibly align their value proposition to the local markets or to the local consumers' needs or requirements? Yes. It's a really large market and the consumers are so diverse. Yeah. Yeah,
well, thanks, Jill. And as Peter said earlier, it's sort of, you're dealing with, say 24 different countries. So, and as you move from a, sort of a wholesale type economy to a retail economy, you have to change your, which is a services sector, you need to change your market analysis and your entry strategy. So it is all about the individual consumer and making sure that your strategy is aligned to individual consumer needs. That's the first acknowledgement that you have to get across and understand that. The examples Peter cited earlier around Starbucks, etc., they're the successful market analysis strategies that have been put in play. And it's all about, you'll hear about it, human capital, our social networks. And what they're trying to say is if you do go into China to set up a business, make sure you invest in the people on both sides. So it's all about collaboration. So we got sort of told yesterday at a luncheon, and it was probably not so much for an accounting firm, but Peter's probably an example of it, where it's better to send your own people over there. So if you want to go into a market, send some of your own people over there who will learn the language, both written and spoken, but they'll always call Australia home. So you sort of get someone in there who's investing in social networks, etc., but they've still got the ties that bind, etc., and then they will sort of build and collaborate with the people on the ground over there. So that's sort of a strategy that's being pushed for setting up successful business in China. The obvious, it's to counter a risk where if you're just getting involved with people who might be relatively unknown, you do have sort of issues, you can have issues, business risks around that. And so that's sort of the going in there strategy. Peter sort of touched on the areas that are lending itself to that, and which is that human interaction around the education sector, health assistance, or which can be aged care, it can be sort of health products, etc. But then on the flip side, it's also coming back the other way. So if you want to, you're an Australian business and you're wanting to receive Chinese capital, then you need to, again, sort of invest in that cultural understanding. So if you're running a hotel here in Australia, you want to make sure that hotel is set up for Chinese tourists, because that could be, you know, the biggest thing that Australia has ever seen. They're worried that Spring Festival next year, I don't know if you ever do business in Sydney during sort of February, March, but it seems like every star around the world comes and has a concert there, or there's some event on, and it's a very hard place in which to get accommodation. And they're worried next year that the Chinese tourists, you know, will be sort of turned away from Sydney and Australia during the Spring Festival because there just won't be the accommodation here to house them. So there's capacity constraints, but the key is to make sure that you are aware that they're coming, and make sure that you've got the, I suppose, this cultural understanding to ensure that they come here for a good experience. Because if they come here and don't have a good experience at the cultural level, they'll go to the Grand Canyon or they'll go to the Eiffel Tower. They'll stop sort of coming to the Whitsunday Islands. So that's...
Yeah. Thank you, Matt. And it's indeed really important to understand the markets. On the other hand, it's also quite important for the companies to build their competitive advantages. Given the interest of the time, I will be covering the next two topics briefly. So for example, Peter, and in one of your reports, and you mentioned that building the brand Australia will provide Australian firms or companies with a competitive advantage in the Chinese market. Can you please elaborate on that?
Yeah, sure, happy to. Look, I think Brand Australia has worked extremely well. I'm not a marketing guy, by the way, but my observations is that Brand Australia has worked extremely well in markets like the US and certain parts of Europe. Without doubt, if you look from a Chinese consumption perspective, there's so much research out there. I've done my own. It's been aligned to many different reports that the Chinese wealthy consumers do want to consume as much Australian, New Zealand produce, cosmetics, consumer goods as they can get their hands on. Again, it's interesting, I think there was a recent study from one of the big banks, I can't remember which one it was, Australian big banks, that highlighted that Australia was rated by Chinese businesses as, the easiest and the best to interact with, the nation they want to do business with the most. So we have, both from a business and a consumption perspective, a really strong brand. The challenge at the moment, there is no Brand Australia in China, and I watch many different industry sectors just get picked off one by one. Take the meat industry, the beef industry in Australia. You can get, I've eaten the best beef that Australia has to offer, not in Australia, I've eaten it in Shanghai and other markets in China. It's very expensive. But I can tell you, none of our current beef exporters into China make any money, or they make very, very low margins. It's because they're being picked off because there just isn't this force in China really driving that Brand Australia and helping them to achieve the premium margins that they should. So I think there's an absolute opportunity, and it's been proven in other markets.
Thank you, Peter. We've got still many topics to cover, but given the interest of the time, so now I open the floor for questions from the audience.
You spoke about the changing regulations and taxes with regard to China. It feels like the goalposts are always shifting. My question is, how does it impact on the FTA, and also what advice would you give to Australian medium to small businesses looking to enter the market?
So is that for me?
Yeah.
Yep, okay. So look, so CHAFTA is just one of the, if you take the region as a whole, it's just one of the many things that are changing. So the free trade agreements, there are current free trade zones and emerging free trade zones in China. All the ports, customs requirements, so the amount of time that goods stay in quarantine at ports, the fees and charges, they're all changing. So indirect taxes and the regulatory environment is changing quite significantly. So that's just China, Australia to China. Then you've got China and the rest of the Asian community. There's, I think we worked out 40-something different FTAs between China and all the different trading companies, which means that for Australian businesses, there are unbelievable tax advantages to flow your goods from Australia into different Chinese ports, but to redirect your transaction data through different countries to mitigate some of these tax challenges. And as I gave the indirect VAT change, there's a whole range of different changes proposed, undergoing, So the best advice that I can give is if you are doing business in China or you've done business in China, and we've got plenty of clients that have been there for a long period of time, they constantly look at this evolving, what we call noodle bowl of FTAs and changing tax regulations. Understand what's changing and try to make as much of the advantage as you can because it is just evolving so much. So the advice I give is actually go and get proper advice, because even if you're over there and you're doing business, what you did yesterday should not be the way you do it tomorrow, because there'll be opportunities or risks presented with these changes.
And I think just to touch on that, they have another way they sort of describe it is they have like a grey economy. And so what that means is they come along after the event and they go, oh, geez, you've made a lot of money in that sector in the last 12 months. And that's probably not ideal. It should be more heavily taxed or whatever. So they bring in sort of laws prospectively. So you always need to make sure that if you've got something that's too good to be true and you're doing well out of it, you need to factor in that it's likely to be taxed or changed into the future. And that's because it's just an evolving country. I mean, you need to sort of understand that it's only been going in terms of its economic arrangement, say 30 years. So there's new industries popping up, there's new sort of sectors, etc., and therefore they're a bit slow to work out what's the best way of taxing that sector. So it's not so much moving the goalposts, it's not a sort of, they're trying to do something that's sort of unfair, it's just they're catching up to entrepreneurs who are sort of ahead of the curve and the government's sort of one step behind. Yeah. But again, get advice, because the people over there will know those sectors that are about to be taxed or about to have the legislation changed, so make sure you're aware that your sector could be hit next. Yeah.
So actually, I have a question with regards to risk and the challenges and that it imposes about China's investment in in Australia. OZgrid being the most recent that I've heard in the news, and I know that media can spin. What were the lessons learnt from that? Because it's about due diligence and trying to make sure that it's successful. It sounds like something happened, and I don't know what influence politics had.
It's a challenging question.
Well, no. So it's it's an interesting question. So so ShineWing in China look after State Grid, but we haven't had any involvement with their investment in Gemina here in Victoria, nor with the OZgrid transaction. So all I can say is, from an outsider, it looked like the FIRB advice was probably too late in the process, but as an outsider who sort of lives in that space, outsider to that transaction, but I live in that space every day and born and bred here in Melbourne, my initial view was that would never fly. So, and you only have to go back, say, 2 or 3 years ago, and you had the Chinese Secret Service copying or hacking the architectural plans for ASIO's headquarters in Canberra. And you sort of got to say, if you process all of this information, you say, what's the likelihood of them being allowed to acquire the New South Wales electricity grid? What's the likelihood of them being allowed to acquire a farm that's in the rifle range or within close proximity to Pine Gap? So if you understand Australian history and sort of geopolitics, you'd sort of know straight away that it's, the first thing you would do is, before we go anywhere, let's just go and ask if this will fly. And clearly those questions weren't asked. Yeah. And it wouldn't matter who the country, if it was, there's some countries that might get in, but there's many countries, and it's not a China. So the message to China at the moment, I met with DFAT last week in a city in China, and it's not personal. There are many countries who would have been knocked back on that acquisition. So.
I had a question on the meat industry, the red beef that was referred to earlier. Can you elaborate a little bit more about the problems that we had there? Like, Victoria's got a red meat industry worth probably $1 billion or $2 billion. And is it the supply chain which is the problem, or the value chain? What are the problems we face?
There's a number, actually. I mean, it's interesting. So look, this is a good half-day discussion. So I'll try and summarise it. There's quite a number of challenges, and it's everything around our lack of local industry representation in the industry that's helping to promote the premium cuts that are coming across to ensure that we're going into the right channel, we're hitting the right segments and the right customers, and we're getting the right price. That's just not happening. So what's happening is that the big traders who are over there are just being picked off one after the other. They're trying to get aggressive, like a lot of multinationals do in many different sectors, trying to get that aggressive growth, but they just haven't thought it through, and therefore the strategy they're implementing isn't getting them the best outcome. The other challenge is, and again, I'll ask the question, but there's a lot of different types of cuts that we consider to be offal that are Chinese delicacies, but we're not selling those. We sell them as, $2 a kilo off cuts, as opposed to the premium you can actually get for those different types of cuts. The other thing too is we continually cut meat in a way that Chinese butchers don't cut it. So there are many, many, many things we're doing wrong. The only good thing for the meat industry is if you look at the forecasts over the next 5 years, there is significant growth of beef consumption in China. It's actually, I think it's almost, I was going to say up by about 67% over the next 5 years. So there's an opportunity to get it right. But I can tell you, having recently just completed a report for Australia and interviewed a lot of the players, no one's making the margins or the money that they should be in that market.
There hasn't been much talk today about the online aspect of the trade, and we saw today with OZtrade and Alibaba partnering up. What are your views on the online markets and, maybe partnerships over the next 5 years between Australian companies and Chinese companies?
Online partnership?
Yeah.
Just with the online, yeah.
I don't really have expertise in the online business in this area, but I think like for online business, I'm not particularly, but maybe because I'm not really familiar with this.
Again, I'll tell you a story to give you an idea as to where this is all headed. So I have a client that's invested about $6 billion into the Australian coal sector. They're a very large state-owned enterprise back in their home province, which is quite a wealthy and well-known province in China. And they've recently decided to start buying into the Australian ag sector. They've got into a dairy group and a beef group because they're going to set up an online buying or selling platform for their, initially it's going to be just their hometown, which say 70,000 people in that area work for this company, and then they've all got a family, and suddenly you're sort of up to close to a sort of 1 million people who are a bit of a captive audience in an online buying arrangement, and then they'll roll that out across their province, and then they'll try to take it into other parts of China. But a lot of SOEs that are here are realising that they already have a captive market back home, and they're all investigating how they can tap into that online market. Obviously it's not on the scale of an Alibaba, but I'm not sure if you've ever seen the graphs for the US online, or even just internet usage in the US market, and then what the Chinese market has done both in online buying and internet usage, etc. It's just phenomenal. And the stories can be as simple as, a city's really polluted, therefore no one wants to go outside to buy anything on particular days of the week. So it's easier just to go online and buy it and have it delivered to your home. So there's a whole lot of stories around that when you sort of get a grasp of it, you start to understand how massive that market will be.
I think the other thing too, so to your point around the partnerships, I think they'll become partnerships between legitimate entities in China and Australia become really important for that trade. The reason being is if you actually look at a high proportion of the volume that's coming out of Australia and then going into a lot of these, because there's many of them, online retailers in China, a lot of them are through the grey market. And it'll, to your point earlier about the loss of tax revenue through those channels, it won't take long before the government starts to realise how much they're losing. They'll slowly start to clamp down. For two reasons. One is for tax, but second, they also don't have control over what goods are coming in, and there's still a lot of challenges with products that are, susceptible to being swapped out to fake and other types of products. So the big one for me right now is the vitamin supplements and minerals, and we've all seen the growth of Swiss. Now, Swiss has only just recently themselves legitimately got their own channel into China. That's all been done by the grey market. And who knows what's been opened and replaced, hopefully none of it, during the course of those millions of transactions over the last 3 to 4 years. But the end consumer really just doesn't know. So over time, as they start to close down, those legitimate partnerships will be the ones that really drive growth through that channel.
I'm just on the OZgrid. I sort of disagree with Matt because it's really controversial in a way. Is the China State Grid Corporation already holds 60% of Gemini here, and also the 34% of United Energy Network, and also a lot of, I think it was 90% or something of Sydney Airport or Melbourne Airport electricity supply. So if they already have more than 50% of network or asset here already, what's the rejection reason? I guess that's the statement. And then next one is my question. My question is, why do you think Australia investors love China-related stocks so much? A recent example would be this week, one novelty group signed a deal with to support the Chinese WeChat wallet. The stock went up by 67% in one day. There's a lot of other successful stories, such as when A2 Milk signed a deal with e-commerce jargon, Jingdong, and also when the Treasury One Estate signed the deal with Jingdong as well. This stock has been gone up by 50 to 100%. So why do you think Australia investors love the China-related stocks so much?
Yeah, well, okay. So the first one, you're right, but the issue is, I think everyone's happy for whichever country it is to own a certain percentage, but it's when that sort of percentage starts getting towards 100%, that's when people get a bit nervous. So, and I think that's the other message that has been lost in this. The Australian government is happy for countries to come in and joint venture on strategic assets and infrastructure assets. But once that sort of, that percentage, particularly with one group, starts getting too high, there's a whole lot of sort of national security issues with that, not just national security in terms of defence, also just in terms of competition and other sort of items. But so that is what it is at the moment. With your second question, it's a numbers game, and I think most Australians are quite sort of entrepreneurial, and I think they get the China story, and I think they're happy to, and where possible, punt on these sorts of markets. I mean, I think Macquarie Bank and these groups, they had all these China funds sort of 10 or 11 years ago, and the Australians just couldn't get enough of it, and then it got hit by the GFC. So I think we've always, we're a gambling nation. We've got a race that stops the nation, so we're happy to punt where the odds are clearly in favour of a particular outcome, and I think that's the Australian way.
We've got time for one more question.
On incoming China investment, we've seen, from the outside looking in here in Australia, we've seen what appears to be some outrageous multiples being paid for, whether it be farming assets, Swiss, Vitaco, Van Diemen's Land type assets that infrastructure funds here in Australia with a long-term view wouldn't even consider paying. Are you able to take us through the thought process of a corporation in China making an investment like that? And are they making it on an economic basis, or are they making it on in terms of securing the asset, and they've got a longer term, return on invested capital that they're targeting compared with, say, a pension fund or that's losing out to them in a bidding process?
Personally, I think the investment decisions made in China mainly driven by the domestic needs, but also, of course, we need to look forward. For example, recently we have seen big-sized deals in healthcare and agribusiness. Particularly, there's a deal made by ShineWing. It's a New Hope. They had a really big deal in healthcare sector. So of course it's mainly driven by the change in domestic demand. But those Chinese investors nowadays, they look really forward. So if they see good opportunities in this market, they will, of course, they want to seize this opportunity.
Thank you, Jing, for the answering. And thank you guys for asking the questions and participating in the discussion. So we're almost at the end of tonight's panel discussion. I'd like to first thank our panel members for sharing their views and insights into the various issues we discussed in the China-Australia business relations. Thank you. Indeed, the China and Australia business relationship is really important to both countries, but it's also a very complex relationship given the many, many differences between the two countries. So I guess a key message that we try to deliver in this panel discussion is it's important for both countries to recognize each other's differences while respecting each other's perspectives. Australia and China already have a comprehensive strategic partnership, and we expect that more opportunities will be opened up as more collaborative agreements being established between the two countries. So being able to leverage these opportunities will be important for both countries' long-term economic development and performance and security. So we hope that the Australia and the China business relationship will stay strong in the future. So that concludes tonight's panel discussion, and thank you all for attending, and thanks again to our panel members for making the time to be with us tonight. We've also got some token gifts to thank you for your time and participation. So now if you can join us for some refreshments and in the ground floor foyer. Thank you guys for participating.